the Fed is the biggest purveyor of wealth extraction, of inflation, and theft, because that's what they've been doing for 112 years. They've been stealing the purchasing power of your earnings by forcing you to use their crappy pieces of paper that they can create out of thin air. And they've been, of course, denigrating those who try to tell you that you need gold and silver. Wednesday, April 23rd, 2025, Maneco 64, home of alternative economics and contrarian views. Well, first of all, I'd like to wish a happy St. George's Day to all my viewers and followers in England. Yes, he's the patron saint of England. So, back to the main topic, in my opinion, right now, and that's the topic of central banking independence. We've seen that Trump, again, back down, Trump and Besant. This time they back down to the Federal Reserve. Trump has just said that he's not going to fire Jay Powell. Somehow he's just changed his mind. So what I want to talk about today is not just the Federal Reserve, but the institution of central banking and how nefarious this institution is and how much havoc it's been creating for Western society. It's like a Trojan horse. It's destroying the West from within. Yes, there's a lot of other distractions that people tell us is destroying the West, but at the root of the problem is the Federal Reserve, the central banks, the Bank of England, the ECB. And why is that? Well, because they have this power that none of us have to create money and credit out of thin air, which is basically an abomination. And it's disappointing that not many more politicians see it. It's only people like Ron Paul or Thomas Massey that see it. Very few see it. And yeah, don't get your hopes up. I kind of had my hopes up about Donald Trump, that he was going to be the new Andrew Jackson, but and also Besant, I had my hopes. He said that we're now going to do everything to help Main Street. But what did he do yesterday? Well, the markets were faltering, so he went on a closed-door investor summit organized not by Main Street, no, by J.P. Morgan, one of the owners of the Federal Reserve, right? And I'm going to recommend 3 books today. First one is Our Crowd by Stephen Birmingham. And it was recommended by a guy whose family was and is part of this crowd, Jim Sinclair. His real family name is Seligman. He took his mother's name. I don't know why. But yes, I highly recommend this book if you can find it. It's about the great Jewish families of New York. And the second time I read this book, I've read it a couple of times, I found a passage here that, of course, I had read the first time, but I didn't realize how important it was and how it's hidden in plain sight. And it's on page 40, and it talks about the Panic of 1837. So here you go. It says, in the Panic of 1837, Belmont was able to perform a service which he would repeat in subsequent panics, and which helped make him a friend to bankers and to the United States government. By negotiating large loans from the Rothschilds, he was able to shore up the United States debtor banks. In other words, he was able, thanks to the hugeness of the Rothschild reservoir of capital, to start out in America operating his own, wait for it, Federal Reserve System. Well, of course, there was no Federal Reserve System in 1837, But by 1913, what Messrs. Rothschild, Messrs. J.P. Morgan, and all the other families in the crowd, what they realized it's that they needed an institution like the Federal Reserve System to make sure that when their schemes, their speculations failed, that the public would come and bail them out. And how does that work? Well, basically, the Federal Reserve, being an agency of government, they come out with the government and say, if we don't bail out Wall Street, the world's going to end. And so what the government does is it borrows money out of thin air from the people who are going to fail and saves them. But they lumber this debt that they borrow onto you. And how do they finance this debt? Well, through taxation. And that's why the Inland Revenue was restarted or created in 1913, because they knew they'd need that. And central banks are a Trojan horse. Yes, they're destroying the West from within. The only thing central banks are good at creating are credit bubbles, credit busts, bailouts, inflation. What else? Wars. They're good at financing all the programs that really destroy society from within. And you can fill in the blank for those social programs. They're good at financing the media, government. They finance everyone because, as Mr. Rothschild said, give me control of a country's currency and I care not who makes the laws. So it's very disappointing then that President Trump is, he's kneeled to the Federal Reserve, and Mr. Besant has kneeled to Jamie Dimon. That's who they really answer to. And what's the way for you to protect yourself financially? Of course, I've been telling you this for almost 10 years now, and there's only one way: with real money, not their debt-based Federal Reserve note. It's not really a dollar. And a lot of people talk about the fact that the mistake with gold is that they fixed the price of gold. But they don't understand that money or gold or silver is measured by its weight. So you can't really change the weight of money. But what the bankers have done is they've changed the denomination of money. Plus, they've also defaulted on their obligations back in 1933, back in 71. And now we have a system where there's no money, but just debt, and we think it's money. So here I have a $20 gold piece. There you go. From 1904. So why didn't they just put the weight instead of saying $20? Well, because it's easier to do accounting if you have a denomination of $20. So for those people who say we have to go back to gold, but we can't fix the price, that's rubbish, because the gold and the dollar came before this crappy fiat currency that we have that can be inflated by the guys at the Fed and the Treasury out of thin air. This is still $20. $20. Yes, the Constitution does give Congress the power to regulate the value of it, and that in of itself is wrong, in my opinion. It's like, why should you regulate the length of an inch? Why should you regulate how much a pound weight is, and so on, right? And the analogy I'm going to give for what's happened to America's monetary system and also the world's monetary system is this. Let's say that you put on a lot of weight and you've become obese. And then you go to Congress and say, can you please change the definition and of the pound, or here in the UK, stone, or in Europe, the kilo. And instead of weighing, let's say, 200 pounds, now you weigh 100 pounds, but you're still obese. And but now that you weigh 100 pounds, you think, well, I'm only weigh 100 pounds, so I can keep eating, and you're going to get more and more obese, and you're going to get really ill and die. And that's what happened. That's what's happening to our monetary system ever since, well, central banks were created for the U.S. ever since the Federal Reserve was created. And I'm going to prove it to you, because inflation can only be created by government through its agent, central bank. The Federal Reserve is not independent. If the Federal Reserve, Bank of England, or ECB were independent, they wouldn't be bailing out governments like they have. They wouldn't be bailing out companies like they have. But the best definition or the best comment on inflation that I've seen is from Felix Sommery, who was a banker in the 20th century, a very well-respected, actually, banker from Zurich, originally from Austria, and he said the following: the state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So there you go. The other thing I wanted to say is that I listened to an interview that Richard Whalen, who's a former employee of the New York Fed, did with Daniela Cambone from ITM Trading. And I was impressed by what he said, actually. He said that when push comes to shove, the Fed is going to print to bail out Uncle Sam, and that we're going down the road of Argentina into hyperinflation. And this is a guy who used to work for the Fed, so he knows the game, and he's come out and admitted it. So some other books I wanted to recommend. First one is by Eustace Mullins, The Secrets of the Federal Reserve. He was the original whistleblower, so to speak, on the Federal Reserve and central banking. He was urged by Ezra Pound to look into the Federal Reserve. And then you have the more popular contemporary book by G. Edward Griffin, The Creature from Jekyll Island. And that's how the people from our crowd schemed to get the Federal Reserve Act through on Christmas Eve, when in 1913, when most senators and congressmen had gone home for Christmas. Back then there were no airplanes, no flights, so they had to take the train, and it took longer. So they pushed it through. And I want to also quote Charles Lindbergh, not the aviator, but his father, who was a congressman from Minnesota. And he said the following about the Federal Reserve Act: this act establishes the most gigantic trust on earth. When the president, Woodrow Wilson, signs this bill, the invisible government of the monetary power will be legalized. The worst legislative crime of the ages is perpetrated by this banking and currency bill. So how did they get away with it, creating the Federal Reserve? And there's a story that some of the very wealthy people that were against the Federal Reserve were on the Titanic, and they passed away. I think John Jacob Astor, and that J.P. Morgan was going to go on the Titanic, but he canceled it in the last minute. And so a lot of the people on the Titanic were in opposition to the Federal Reserve. And the Titanic, of course, sunk in 1912. But I think one of the ways they got it through is through creating credit bubbles and crises. The previous crisis in the run-up to the meeting at Jekyll Island was the Panic of 1907, supposedly triggered by the earthquake in San Francisco. And of course, J.P. Morgan came to the rescue. Deep down, it wasn't really J.P. Morgan, it was the Rothschilds in London, because J.P. Morgan is just an arm of the Rothschilds. For those of you who don't know, J.P. Morgan started out in London in the 1850s, well, even before the 1850s. It was started out by someone called George Peabody, and when he died with no heirs, he passed it on to Junius Morgan. But in 1857 as well, George Peabody's bank was bailed out by the Bank of England. And who controlled the Bank of England at the time? Well, it was the Rothschilds. But so after these crises, and you had these crises regularly in a system where there was no central banking, and it actually worked out in the end because you had credit bubbles, credit burst, but the price level would always stay the same. So they pushed this idea that the U.S. needed an elastic currency, and that the Fed would provide an elastic currency, that it would provide credit to commercial paper issuers to keep the business going, and they said that it would end all of these crises, and it hasn't, of course, and that's how they got it through in 1913. And here I've got a chart that I want to show to you, not just because of what's happening today in terms of the gold price, but what has happened since, around 200 years ago in the U.S. And you can see that from 1833 to 1933, there was no price of gold, of course. Well, maybe in terms of a paper currency, but this was gold. It was just $20.67. It's like saying that the kilo or the pound change is always going to be constant, and that's why, you measure money in weight. But notice how in the early 30s that all changed. They basically destroyed the gold standard domestically, and they basically counterfeited. They changed the definition of this so the bankers wouldn't go bust, the J.P. Morgans and the people who controlled the Fed. Because what do they do? Well, during World War I and during the 1920s, they lent too much currency without gold backing. It wasn't gold that was the problem, it was the bankers. So that was the first time they ripped off the public and lumbered huge amounts of debt on the public. And then they did it also during World War II. Wars are a great business. It's a great business model for central banking and Wall Street, because they make out like bandits. And I recommend you read War is a Racket by Brigadier General Smedley Butler, and you can see why it is a racket. Wars, pandemics, crises, they always have an excuse. War with China, this and that, to basically play on your patriotic feelings, so that you lend money to Uncle Sam and the bankers. Did you know the Liberty bonds that were issued in 1918 to pay for World War I? Well, they were gold-backed, but in 1933, that all changed. FDR and the bankers defaulted on it. That was when he made gold illegal. So, but the most shocking part about this chart is after 1971, when there wasn't even any link to gold. When they took Richard Nixon, and some people say it wasn't him, of course, he was just a front. It's really the bankers on Wall Street. They said, we're now going to pay you with paper, with debt. So basically we have a system where you can't extinguish debt because you're paying with debt. And that's why the debt has gone through the roof. And that's why the dollar, up until, well, 2 days ago, it traded at 3,500. Well, the ounce of gold traded at $3,500. That's how well the Federal Reserve has done in protecting the dollar. The fact that the dollar's dropped like 100 times versus gold since they basically created this fiat currency system that, in my opinion, is going to end in tears. Some people in the mainstream say, well, if Trump interferes and sacks power, it's going to be inflationary. People are going to lose faith in the credibility of the Fed. But the Fed has no credibility, people. The Fed is the biggest purveyor of wealth extraction, of inflation, and theft, because that's what they've been doing for 112 years. They've been stealing the purchasing power of your earnings by forcing you to use their crappy pieces of paper that they can create out of thin air. And they've been, of course, denigrating those who try to tell you that you need gold and silver. So I'm going to stop right here. What about the markets this morning? Yeah, they're quite volatile in terms of gold. And I'm sure some of you probably been hearing a lot of people saying, oh, gold is topped. This is it. But if you look at this chart that I've drawn here, do you really think it's topped? Do you think things are going to change? I don't think so. So as Jesse Livermore once said, if you're right, sit tight. Yes, be right and sit tight and ignore all the noise. Because do you really want to jump into the Federal Reserve system and hold their paper that is getting devalued left, right, and center? No, I don't. So there you go. Just an update here then. It's just gone 8:12 a.m. London time. We're at 33.08. Yes, we got to 3,500. So almost $200 move. And it's going to get bigger and bigger. It's nothing wrong with gold. It's something wrong with the Federal Reserve currency. The more it drops in value, the more wild the swings are going to be. And that's why I've also made videos in the past about how it's difficult sometimes to hold on to an asset in the bull market. In this case, the bull market is gold. The bear market is fiat currencies. So you got to hold on to the bull for dear life. And I think this is one of those situations. For people who trade, I've got nothing to say to you, because trading gold for fiat is just a crazy proposition, especially in the juncture that we are. And don't forget, Richard Whalen said, we're going to end up in hyperinflation. And I agree with him. I've been telling you this for years. So with that, I'm going to wish you all a very good day. Take care. Bye.